Welcome back to Bazaar Morning Call. Well, we have lots of stocks in focus this morning, so let's get straight to it. Looks like it's going to be a good start to trade. By the way, our research team is here to help us with a list of top 10 stocks. Sonal is joining in first up to give us a quick review on two companies, ONGC and Oil India, that came out with their numbers. Sonal, good morning.
Good morning, Sonia. Well, let me start with ONGC. Revenue growth was decent. It was up 11% on a quarter-on-quarter basis, but EBITDA declined by 2%. Margins came in lower. This is after considering the exploratory cost as well. So that came in at 44.5%. Profits were flat at 9,869 crore rupees. They were also aided by lower depreciation and higher other income. Crude realizations came in lower quarter-on-quarter. Total gas production was lower on a quarter-on-quarter basis. But the good news is this time around, total oil production has increased for the company on a quarter-on-quarter basis. For Oil India, it was a good set actually. Their revenues were up 4%, EBITDA was up 11% on a sequential basis, margins came in at 42% versus 39%, and profits were up 28% as well. And the additional sweetener here is they have announced a bonus in the ratio of 1:2, so that is something that the street would like as well, going with green on Oil India this time around.
Okay, thanks a lot for that, Sonal. Well, let's hop across to Vivek. He's joining to tell us about BEL. Morning, Vivek.
Well, good morning. Very healthy set of numbers from BEL to end FY24 Q4. When you're talking about all three metrics, our revenue, EBITDA, as well as profitability, well above what the consensus estimates was. And on the back of that, there have been upgrades that have come in as far as EPS estimates are concerned. Now, talking about the numbers themselves for Q4 gone by, revenue is higher by 32% on a year-on-year basis, EBITDA higher by 25%, margins to very strong 28.3% versus 26.7% on a year-on-year basis. On the back of that, profitability higher by 31%. Now, what is the good part about the results? FY24 order inflow has come in at close to 35,000 crore. Remember, the company's own estimate or the guidance that the company had given was just around 20,000 crore. Along with that, when you're talking about the order book where the company currently stands at, it stands at a little over 75,930 crore. So it's a very strong set of numbers, very good order inflow, as well as a strong order book that BEL currently sits at.
Okay, all right. Thanks a lot for that, Vivek. Well, let's focus on SAIL. Going by this entire environment, even if the numbers are a miss, you'll have to say that the stock could move into the green. But these numbers, you need to look at the adjustments, and they're actually a little bit better than what the street was working with. So we're going with green on this one. On the volumes, well, they were on expected lines, coming at around 4.6 million tons odd. The revenues, well, there was a bit of a degrowth because prices are weak. But you need to look at EBITDA on two fronts. One is the absolute EBITDA number, which came in at around 3,500 crores approximately. But then you need to adjust because there was a railway price revision that came into play. And because of that, the adjusted EBITDA number is close to around 1,950 crores, which is still better than what the street was working with. The range was very wide from 500 crores to around 1,500 crores. So the numbers are still better. There was an exceptional hit as well in this quarter because of the government taxes under a couple of schemes out there. So that's why the net profit number got distorted. But otherwise, the operational performance was good. You have steel prices as well that have moved up and coking coal costs that have cooled off. So the margin expansion will pick up from here on. The only problem is the debt number has moved up to more than 30,000 crores as well. And being a PSU, it has very ambitious expansion plans. So the debt number is a bit of a worry. But going by the numbers, you'll have to say the stock opens up in the green. Sentiment as well is fairly good out there.
Okay, thanks a lot for that. Well, let's go across to Ekta now. She's going to tell us why you need to look at Biocon this morning. Ekta, over to you.
Thanks for that. Well, yes, there was a US FDA press release last night where they indicated that Biocon's biosimilar Aflibercept has received interchangeable status from the US FDA. Now, the US FDA approved two of them, which is basically Biocon's drug, Yesafili, as well as another one with interchangeability status. Now, what does that mean? Is that basically when you go to a pharmacy, if you don't have a prescription for a certain biosimilar, you cannot access that biosimilar. But now, if you go with a prescription for, say, the reference product or the branded biosimilar, you can still get Biocon's drug now without a specific prescription for it. So that is basically the big kicker which Biocon would receive once they launch this particular drug in the US markets. Now, Aflibercept is used for eye conditions such as macular degeneration, macular edema, diabetic retinopathy, and it marks their entry into the ophthalmology space, in the biosimilar space in the US. Now, Biocon has not yet launched this drug. The patent for this particular drug or biosimilar expires in 2027. and the market size is significant. It's at $5 billion. It just shows Biocon's prowess in terms of getting approvals with interchangeability status. They've received insulin glargine in the past, and now with aflibercept, it's another feather in their cap. So while they haven't launched the drug, it just shows their ability and their prowess in the biosimilar market. Expect the stock to be in the green.
All right. Ekta, thanks very much for that. So keep an eye out on Biocon as we start this morning. Deepak Nitrite is the next one we'll focus on with numbers. Sonal has got details. Sonal, morning.
Good morning, Prashant. Well, the consolidated numbers, if we look at them, the margins have declined on a YOY basis, but quarter on quarter, it's a good recovery that the company has seen. Overall, revenues are up 8.5%. The EBITDA is down 13%. Margins are lower by 300 basis points, but profits are up 8.5%. But if we look at the internals, there is a recovery both on a YOY and on a quarter-on-quarter basis in both their segments, be it advanced intermediaries, where the EBIT has come in at 134 crore rupees, and especially phenolics, where their EBIT has increased by 16% on a YOY basis. There's a recovery on a quarter-on-quarter basis as well, and that's the reason I'm going with green. The recovery in one of their major segments, which is phenolics, which has been under pressure in the last couple of quarters, and more commentary is something that we'll get on the conference call.
Okay, thanks a lot for that. So we'll keep an eye out on Deepak Nitrite, but let's also talk about IRFC. Abhishek is here to tell us why you need to watch that one this morning. Abhishek, over to you.
Well, Sonia, strong P&L coming in from IRFC. The NI is up 34.5% YOY and more than 7% sequentially. The OPEX is down about 28.7% YOY and 2.3% quarter on quarter. That has helped the operating profit growth of 33.5% YOY and about 7.5% sequentially. Provisions have declined by 19% YOY and more than 1% sequentially. So the PAT is up 33.5% YOY and close to 7.5% sequentially. Back to you.
Okay, Abhishek, thanks a lot for that. But tell us about Ujjivan Small Finance Bank as well.
There is slight hiccup in the asset quality, but no worries given the fact that this merger has proved to be beneficiary for them with respect to cost of funds. So gross NPA in absolute value has increased by 7.3% quarter on quarter. Gross NPA ratio has increased by just 5 basis points sequentially. The net interest margin is at a 6-quarter high of 9.4%. This may not be sustainable, but in Q4, they had a one-time cost benefit with respect to merger of about 17 basis points on the cost of funds. Overall cost of funds have declined 25 basis points sequentially. The RWA to advances, that ratio is at 15-quarter high of 76.7%. They have given FY25 guidance, so they expect to maintain a loan growth of 25%, which is on the stronger side. Credit cost will normalize to about 1.4 to 1.5%. It was at 0.7% for FY24. A net interest margin will remain around 9%. It was at 9.1% in FY24. And ROE, they are targeting of about 22%. It is at 26.1% in FY24. PNL, with reference to NI and PAT, it's a beat on our poll. Back to you.
All right, some guidance being put out as well, as Abhishek points out. Abhishek, thanks very much for that. In fact, you'll hear from the management, which will be with us at 8:35 this morning. So in about 5 or 6 minutes, you'll hear from the Ujjivan Small Finance Bank management. Now let's move on to Whirlpool, which reported earnings as well. Vamakshi is here with details. Vamakshi, morning.
Well, good morning, Prashant. Well, a good set of numbers is what Whirlpool has reported this time around. Revenue has seen an uptick of almost 4% on a year-on-year basis, coming in at 1,734 odd crores. Now, this improvement in the revenue has come in despite the market for refrigerators and washers remaining quite flattish. The company has gained significant market share in the past quarter, and as a result, they've posted modest revenue growth of nearly 4% year-on-year. The operational performance for the company has also seen an improvement, with improvement coming in margins as well, up nearly 200 basis points YOY. Margins now stand at 8.3%, and this improvement is largely being aided by volume growth, strong cost productivity actions, as well as improved a mix of premium as well as the high margin portfolio. Apart from that, when we look at the net profit, that has come in at almost 79 crores, which is an uptick of almost 25% YOY. Moreover, when we look at the cash flow generation of the company, CFO has actually surged by almost 2.8 times YOY to 535 crores, and this has largely been supported by a reduction in the working capital. Even the free cash flow has managed to stand at almost 470 crores as compared to 16.7 crores in FY23. So overall, a good set coming in from Whirlpool. Expect the stock to open higher today.
Okay, thanks a lot for that. Well, Vivek is joining in to talk about Kalpataru Projects and why you should be watching that one. Vivek, over to you.
Well, good morning. This has been long awaited. So what essentially was missing in the puzzle was the fact that the company had not yet declared the total quantum of the order or the size of the order that the company had gone ahead and received the LOI from Saudi Arabia's Aramco. So now, the company has given the complete update to the exchanges. Now the company has gone ahead and signed 3 contracts for 3 packages for the 3rd expansion phase of the master gas system network in Saudi Arabia. Total contract value is close to 7,550 crores. This is significant for Kalpataru. Now, along with that, one thing to remember, on March 5th, the company had already updated the exchanges saying that they had received the LOI for this particular project. So, order book at the end of FY24 stood at over 58,400 crores. This is a significant order. Details of it was what was pending, but the street was largely anticipating this particular deal to come through.
Okay, thanks a lot for that. Here's a quick recap of our top stocks. Stocks with positive news flow: Oil India, BEL, SAIL, Biocon, Deepak Nitrite, IRFC, Whirlpool, Ujjivan Small Finance Bank and Kalpataru Projects, while the only stock with negative news flow today is ONGC. But there's so much happening in the world of commodities. Manisha Gupta joins in for a roundup of all the action there. Manisha, gold has been surging. Silver is now at an 11-year high, and there's plenty happening in the world of commodities.
Oh, well, absolutely, Sonia. I mean, when you look at the gold and silver prices, we're trading at an all-time high in the Indian markets right now. For the gold prices, it's an all-time high for the global markets as well at $24.40 an ounce in the Asian markets right now. So we seem to have been building up on what the kind of gains that we saw on Friday. This is mostly about safe haven buying. One, you have less than anticipated US data coming in, and that has led to the dollar index sliding a bit. And then apart from that, with the kind of statements coming in sense of Israel, the Iran helicopter crash, and then the the King Salman in Saudi Arabia, his health is uncertain as well. So the overall Middle East really seems to be caught in with uncertainty, and that has been supportive for gold and silver both. For silver, it also is about the industrial demand, which is expected to hit a record high for a 4th straight year in 2024, also supporting prices.
Okay, all right. Thanks a lot for that, Manisha. Well, for the time being, we'll slip into a short break. You come back, we'll discuss a lot of stocks. Abnish Agarwal of Prabhudas Lilladher will be joining in for some stock talk.